Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's webinar organized by AASB of ICI. As the theme is very relevant, that is the key considerations in the audit of NBFC. And in order to tackle this particular theme, we are having with us CA Manan Lakhani ji. So on behalf of AASB of ICI, I extend my warm welcome to you, Manan ji, on this Zoom platform.
I think Anil, there is some network issue.
Webinar. So before, I also welcome all the participants of today's webinar. Before we formally start this webinar, I would like to introduce our today's learned speaker, CA Manan Lakhani ji. Manan ji is a chartered accountant from Institute of Chartered Accountants of India, and he has also obtained a diploma in International Financial Reporting from ACCA UK. He has post-qualification experience of more than 19 years in the area of accounting, advisory, and audit. He has extensive experience of high-quality corporate accounting, financial reporting, and audit for listed and large entities across sectors such as NBFC, fintechs, retail, and consumer products, pharma, manufacturing, etc. He has led IFRS, Ind AS convergence projects, including implementation of new IFRS, Ind AS, and other accounting advisory projects for a broad range of complex accounting issues. He has extensively supported audit teams in a wide range of issues. He has international experience of working in London in the areas of technical accounting and advisory services. He is also a speaker at various professional forums and has imparted various trainings. He has also been involved in developing educational material and guidance note issued by the Institute of Chartered Accountants of India. Still, the list is vast. So without wasting much more time, I request our today's learned speaker, CA Manan Lakhani ji, to please enlighten all of us on various key considerations while auditing the NBFCs. Over to you, Manan ji, please.
Thank you, Anil ji. It is a privilege to present on this forum, and I would like to thank the institute for giving me this opportunity, and I'm looking forward to the session. Thanks a lot. Let me just present my screen.
Ji.
Is my screen visible?
Yes, sir.
I'll just move the screen also so that we are aligned. Are the slides moving now?
Yes, perfect.
Okay, great. So let me just do a quick kind of background before we kind of dive into the actual key considerations for NBFCs, for audit of NBFCs. So yeah, good afternoon everyone. As we all know, NBFCs are an important constituent of the Indian financial services sector. They support the credit requirements of various sectors, especially the unserved and the underserved population. The RBI has already prescribed a strict regulatory regime for the registration and functioning of the NBFCs. More recently, RBI has issued the scale-based regulations for NBFCs, which kind of categorizes them into various layers depending on their systemic significance. Statutory audit of NBFCs is an important instrument to bring in discipline and oversight in the functioning of NBFCs. It becomes even more significant considering the number of instances of misuse of public funds, irregularities in functioning, bankruptcies, etc., that we have seen in NBFCs. Therefore, it is very important that the audit of NBFCs is kind of performed in the desired manner. So what we'll do in today's session is we'll cover some of the practical aspects that need to be taken into consideration when performing the audit of some of the core business areas of NBFCs. that is, lending, borrowing, and investments. However, what we'll cover, you'll appreciate is not kind of intended to be an exhaustive list of procedures to be performed in an audit. As we know, the auditor is required to kind of comply with, all the requirements of all the standards on auditing. So we'll look at some of the kind of, what could go wrong and test of control, substantive procedures, and so on in respect of the core financing activities in the entity's financial statements. It is important that the auditor should carry out procedures based on the type of activities the entity carries out and the way in which those activities affect the financial statement assertions. Needless to say, the auditor needs to understand the nature of the business which the NBFC undertakes and the business environment in the jurisdiction in which the NBFC operates. So with that background, let me move to the first slide. So as we know, right, that audit planning is kind of the most important thing at the beginning of the audit. Unless we plan the audit properly and comprehensively, will not kind of achieve the desired outcome that we are looking at. Now, in order to kind of, do a good, effective, and efficient audit, a detailed audit plan is necessary for the auditor to prepare. Now, the audit plan would include various things, as I've kind of highlighted on the slide as well, which includes, first of all, obtaining knowledge of the entity's business and the overall governance structure. That would include an understanding of the products, the market conditions in which the company operates. In addition to that, corporate governance, like in any other entity, plays a very important role at NBFCs. Whether any third-party service providers have been used to provide any core activity or services, and what are the risks around those service providers. Risk associated with the financing activity. So, for example, a vehicle financing company needs to ensure that the asset itself exists and can be traced, right? So, in addition to that, we also need to obtain an understanding of the accounting and the internal control systems, including the internal audit function. How kind of extensive is that? We also need to consider the assessment of inherent and control risk, basically, where the risk that material misstatement can occur, which is nothing but the inherent risk, and the risk that the NBFC's internal control systems don't prevent or detect and correct such misstatements. In addition to that, I think it is also important to consider the appropriateness of the going concern assumption in the light of the liquidity issues which we are seeing globally, right? So I think it is very important to assess the going concern assumption itself. Based on that, we need to determine the nature, timing, and extent of audit procedures to be performed for a particular year. In addition to that, I think you also need to take into account any sort of instances of fraud being reported to the RBI, and how it can impact the audit that you're going to conduct. Then, considering this is a highly kind of regulated entity, we also need to have attention to be given to the regulatory considerations, like what is the basis for licensing of the NBFCs? Do we have the certificate of registration? Is it complying with the requirements of the certificate of registration? Is it complying with the owned funds requirement? Is it complying with the capital adequacy requirement? Is it complying with the prudential norms? So I think a whole host of regulatory considerations that the auditor needs to be mindful of and perform procedures to get a comfort on those aspects. So this was about audit planning. Now, moving on, we'll look at, as I mentioned, some of the important areas which are the core business specific for the NBFCs, which is lending, borrowing, and investments. The auditor must kind of identify the assertions, which is nothing but accuracy and valuation, existence, completeness, rights and obligations, presentation and disclosures that are of particular importance in relation to the items in the NBFC's financial statement. What we will cover is essentially what could go wrong, in respect of the loans, borrowings, investments. We'll also cover some of the substantive procedures that may be performed in this area, and what are some of the typical audit issues that are generally observed in these areas. Let me move on to the next slide. So if we look at loans, right now, from a loan perspective, I think the auditor should consider the loan booking approval process, basically, and the disbursement process, subsequent collection, and collateral management. The auditor should also consider, most importantly, the appropriateness of the provision for the loan, whether the expected credit loss has been appropriately provided or not. Now let's look at some test of controls, and this is like more from a pre-disbursal stage, right? So what could go wrong? So if you look at the first thing, right, loans disbursed are not properly authorized. So this basically deals with your rights and obligations assertion. Now, typically the authorization of loans should be, So typically the authorization of the loans should be as per the authorization matrix, and after completion of the loan disbursement checklist. Typically there should be a credit note which has to be approved as per the authorization matrix. If not, then this could potentially lead to cases of frauds or risk relating to the recovery of loan. For example, there's a loan authorized to a customer of an amount higher than his eligibility, leading to a potential NPA or a fraud. In addition to that, typically a lender would conduct a credit appraisal, essentially to make certain that the NBFC gets back the money that it lends to the customers. And in that credit appraisal document, the NBFC will check the borrower's credit history, the CIBIL score, projections, the repayment capability of the borrower, ratios, etc. So this all, including, for example, his repayment behavior, ratios, if it's a corporate. So this all will help you to help the company essentially to ensure that the loan disbursed are as per the policy of the NBFC, and which is very important for comfort for the auditor, that the due process has been followed before the loan disbursal. Now the other aspect which would go wrong is again in terms of the KYC completion. So for example, loan documents are not properly executed. And KYC completion, as we know, is important to comply with the RBI guidelines to avoid any incorrect or fictitious disbursements. If KYC and credit underwriting are not appropriately performed, this may lead to excess defaults and maybe eventual impact on the business operations if aggregated kind of beyond certain limits. And hence, neglection of basic KYC checks can have a significant impact on the operation of the NBFC. And it is important for the auditor to evaluate whether the KYC norms have been appropriately followed by the NBFC. Now, the third thing could be, loans are sanctioned without adequate security or adequate charge not being created. Now, this one impact of this could be, in terms of the provisioning as per IRAC, because as we know that the provisioning on the unsecured portion is different from the secured portion and so on. So if the charge is not created properly, then the company will not have the rights of recovery from the collateral assets. Now, whether the charge creation documents are in place or not. So typically like the mortgage deed or the hypothecation agreement or the pledge agreement. So based on the test of control, the auditor need to look at on a sample basis whether all this process is kind of followed or not. Because the verification of charge creation document is important to establish the adequacy and appropriateness of the collateral. Also, it is necessary to obtain the original loan agreements and the collateral documents, which are basically executed on the stamp paper and duly signed by all the parties. This will, in a way, provide an overall comfort to the auditor in terms of the process followed for the approval of the loans. So this is more from a pre-disbursal stage, if I have to put it like that. Now, let's move on to the next slide. The next slide is in terms of, broadly from a post-disbursal stage, what, needs to be taken into account. Now, here, what could be the risk, right? The risk could be that the loan disbursed are recorded in an incorrect period. So this will typically show an incorrect balance sheet position and corresponding income booked in the P&L account, and potential impact on the ratios and so on. So now whether again the credit appraisal memo, right, whether it contains the details about all the loan terms and analysis before loan is approved. Cutoff testing is again very important, and that needs to be done. And typically the disbursement should also be verified with the bank statement. So this would help you in mitigating the risk that the loans are kind of disbursed are not or are recorded in an incorrect period. Now, the other risk could be, typically the loan particulars are incorrectly recorded in the system itself. Now, for example, the secured, unsecured tagging for the loan in the system, or the type or category of the loan in the system, the borrower type, right? For example, if the borrower type is different, then the interest rates could also sort of vary. So it is important that, all the terms and conditions, the loan features are correctly populated by the system. The other could be issue could be in terms of maker checker control, right? Does the system have a proper maker checker control on recording of the loan in the system, and whether those details are correctly captured and reviewed by someone? Otherwise, again, there is a risk. The third thing could be, fictitious disbursements being recorded, right? Where this could be a kind of typical case of fraud, and thereby impacting, balance sheet, revenue position, and so on. So it is important to see whether there is a, sanction letter which has been approved, and whether before issuance of the sanction letter, all the KYC checks have been done, and so on, to avoid this risk. In addition to that, I think the bank statement checks, right, will also enable to ensure that there has been disbursement of amount to the correct person to whom the loan was sanctioned. So basically, it is important to confirm the actual movement of cash and that the entry is not merely a book entry. Then checking the title through agreements and signed documents to ensure that the title to the property is clear and free from any kind of encumbrances and free from any charges. So this is a very important step for secured loans. The third issue could be like, or the last issue could be like the incorrect system logic for appropriation of EMI. Now there are various, loan management systems, and there are different kind of system logics. And in some of the cases, the NBFCs could have their own sort of policies in terms of how do we appropriate the EMIs, where there is no explicit requirement. So, so typically there's an automation in terms of loan processing, which is there industry-wide. However, if certain critical functions such as the computation of EMI based on system logics can become very problematic. So generally, obviously, the automation kind of facilitates the entire business, but sometimes, in fact, it is important to check on a test check basis whether the system logic is actually working properly or not. So kind of a user testing is necessary to ensure that the EMI computation is correct and the logics used in the system are basically in accordance with the policies of the particular product or the features of the particular product that the NBFC is offering. Now, EMI repayments are auto-computed, and it is necessary to check, the repayment schedule manually, whether the system is kind of giving the correct output or not, whether the future repayment, DPD tagging, which is the days past due tagging, interest computation. So whether all these things, in terms of the data events or in terms of events which happen during the life, cycle of the loan based on the products which the NBFC has, it is very important to verify those aspects even when it is automated. So on a test check basis, it is important to perform these procedures. So moving on, let's look at some of the sector specific issues. Like as we know, there are various NBFCs catering to kind of different products, and some of the individual kind of subsectors within the NBFCs could have their own peculiar issue. So now let's look at some of those sector specific issues as well. So now what happens, like in case of a housing loan, right? What all procedures which the auditor may kind of consider doing or performing. One is citing of the original kind of property documents. So basically to verify the existence of property that is being purchased, whether the original documents are there, they have to be verified and ensure that the usage of the loan is for the intended purpose. This is also typically a part of the subsequent procedures which the NBFC itself performs to ensure that the utilization of funds is appropriate. The other could be whether the property address or the owner details are consistent with what is recorded by the company in its own loan book or in its own loan register. So for sample checking, you can also verify that. The other thing is whether the mortgage deed is consistent, like so basically this will have an impact in terms of the decision for the loan disbursement, to what extent the loan needs to be disbursed. Similar to that, I think citing of the valuation report, right? So typically, as we know, that there are various NHB guidelines in terms of the LTV, the maximum loan to value ratios and so on, to which the disbursement can happen. So I think, and in some of the cases of non-compliance, the auditor also needs to report to NHB and RBI. So I think it is important to cite the sort of valuation or to see the valuation report to check the LTV compliances as well. Now, in case of corporate customer, it is important to see whether the registration of charge is properly in favor of the HFC, and then this can be sort of even verified from the MCA website. Sanction letters, like in case of, let's say, balance transfer cases, right? Typically, the auditor should verify that the sanction letter has been transferred by the original bank, and the NOC has been provided by the earlier bank for transfer of such a loan. So these are typically some of the other checks which the auditor should perform as a part of the substantive procedures. Now, moving to construction linked finance, right? Now, if we look at what could be the risk relating to construction linked finance, right? So, and what the auditor needs to do. So one is whether the disbursements are sort of linked to the construction stages, right? Typically, the percentage of completion of the project is linked to the amount that needs to be disbursed. So sometimes the physical verification of the stage of completion or the site visit may be required to make that assessment on the completion of the project. In most cases, auditors would kind of typically rely on the certificates of from the engineer to ensure that the stage of completion and the disbursement is in order. The other thing could be legal clearance report from the lawyer. So only typically an NBFC approves a loan only after carrying out a detailed legal and technical verification. This would also involve verification of the original documents and so on. And typically the important point here is that in case of a default, right, the agreement should be legally enforceable, and the NBFC should be able to recover money from the customer, and they should be acceptable by a court of law. Because if the agreement is not legally binding, then the customer will have no liability to return the amount, and this could have an overall bearing in terms of whether the loan is being carried appropriately in the balance sheet or not, or there is a need for provision on such loans due to the lack of legally enforceable security. The third could be in terms of as we know that professional skepticism is very important, right, as an auditor. And even in this case, I think the auditor needs to skeptically examine the documents to test like any sort of possibility of any kind of fake documents created in any manner. Where typically someone may obtain a loan by providing kind of fake document, and there's a clear kind of fraudulent situation which is done with the intention to deceive the lender. So I think these all checks are again very important where there is a construction linked finance which is there. So now we move on to the other kind of subsectors where there could be loan against shares, for example, right? So in those cases, it may be important to verify the holding statement and pledge report from custodian and obtain balance confirmation certificates from the trustees. So these are kind of checks to ensure that the shares are in the name of the borrower and held by the borrower when at the time of sanctioning of the loan. So typically the holding statement is the first level of check, right, to ensure that the securities exist. And then maybe a confirmation from the trustees could be another level of check to ensure the accuracy provided by the borrower. In addition to that, I think monitoring of the charge creation, valuation of securities, because the underlying securities, are the collateral, right? And then the auditor must ensure that the amount of loan based on the valuation is correct. If the loan sanction is, way off the valuation of the securities, it could either mean incorrect, sanctioning of the loan, or it could, also impact the recoverability in case of a default. Now, typically in case of gold loan, right? So gold loan, again, one of the sort of important procedures for gold loans is physical verification of the gold held along with the certificate, right? And which should be in the name of the holder of the gold loans. The valuation of the gold again becomes very important. So yes, these are some of the procedures which are more kind of subsector specific, within the overall NBFC sector. Now let's look at some of the other, common substantive procedures. What all additional procedures other than the test of controls and all, which the auditor needs to perform. So one thing could be like to sort of verify the document for all fresh loans above a particular materiality threshold. So in each audit, you will have a materiality threshold, right, depending on the NBFC. So the materiality levels need to be determined based on the auditor's judgment. And then there could be usage of a sampling tool to determine what is the minimum number of, items that you need to check basis the risk involved. So yes, I think we need to verify all the underlying documents for new loans which have been disbursed. The other procedure could be in terms of getting the independent balance confirmation, right? For again, all the loans above the materiality threshold. And in case you kind of don't receive the confirmation, then what are the alternative procedures that need to be followed? So this is, required both in case of retail loans as well as corporate loans. I mean, you need to send, as we know, we need to send independent confirmation, which are sent and the response is requested. And if you don't get the responses, then you do, alternative procedures like maybe, tracing the disbursements from the bank statements and so on. So there's the other step. The other thing could be cutoff procedures, right? Again, which is pretty standard, where you kind of look at disbursements and collections near the reporting date, and this is like more important to identify, whether there are any chances of deferring certain disbursements and collections to the next period or recorded in the earlier period in order to maybe tweak the numbers. So I think even in these cases, tracing the disbursements from the bank statements become important. In addition to that, analytical review procedures based on average ticket size, interest rate, product mix, geographical spread, or interest kind of average interest rate. So there are various analytical procedures which we can kind of conduct, and any kind of unanticipated movements, right? Significant increase or a decrease which is not expected. I think we need to then sort of ask appropriate questions or do appropriate reasoning that why it has happened, and obtain satisfactory answers to that. Now, another very important thing is in terms of the evergreening, right? So where we see that typically, there we need to look at the loan foreclosure and disbursal reports, right? And maybe filter it out through some unique customer identification number, and check whether there have been loans which have been closed and opened on the same date or the nearby dates, which could be an indication of evergreening, which is nothing but new loans being granted to close existing loans, right? Where there could be a likelihood of default on the existing loans. So you close that loan by granting a new loan. So I think this is a very important procedure which auditor needs to perform. And typically the samples are selected, and you check various things like what was the loan overdue, what has been the DPD tagging of the earlier loan, how was it closed. So I think if there are instances of loan evergreening, I think they would typically need to be get classified as NPA, and that could be one of the audit adjustments. In addition to that, I think we will need to do aging analysis on the outstanding loans to see any kind of abnormal movement in arrear status from previous period. It also helps to monitor the asset liability mismatch, right, which is again very critical. It also helps to understand the bucketing of the loans and whether any kind of decision needs to be taken for classifying such loans as NPA. The other thing could be, identifying a group of borrowers, right? Now there are certain credit concentration related disclosures and limits which the RBI has prescribed. So as an auditor, we need to check that, whether there's how much is the concentration of exposure at a borrower or group level, and whether that has been appropriately maintained and disclosed, and whether it is within the limits prescribed by the RBI. Sorry. The other thing could be in terms of the reconciliation between the loan management system and your financial reporting system. And this is typically the structure or the construct of the systems in NBFC. So I think it is very important to ensure that the accounting system reflect the same balances as in the loan management system, and this become very important towards the reporting date or at the reporting date, where there could be instances of some entries being posted manually. I mean, not necessarily these are the intentional entries which are posted genuinely because some of the last day adjustments need to be put out of the LMS. So we need to differentiate that what is the entry being posted manually, and what is the reason for that. So I think it is important to reconcile the LMS and the financial reporting system which is there. So yes, I think these are typically some of the test of control substantive procedures which the auditor needs to keep in mind when performing the audit of the NBFC. In addition to that, if we now let's go to the other important area, right, which is the impairment of loans, and this is one of the very, very significant areas which the auditor should clearly kind of deep dive into, whether appropriate provisions have been made, and it's more so relevant in the current scenarios. So in terms of impairment, I think the first thing is in terms of risk assessment and planning, right? So the audit team should understand the loan portfolio, including the industry risk, what are the economic conditions. So for example, in a COVID scenario, the thought process could be different. In a post-COVID scenario, the thought process could be different. So I think depending on what is the economic condition and how the company has factored in these things in developing their ECL models, I think so that's very important for the auditor to understand. Again, what has been the methodology and approach which has been used by the management and documented to compute the ECL, and whether it is in compliance with the requirements of the accounting standard. I mean, especially for companies, NBFCs following Ind AS. In addition to that, I think we also need to check the accounting policies in relation to the ECL, including the basis for calculating and recording the expected credit loss in the financial statements. Now, moving on, how do we assess the expected credit loss, right? So when you look at the methodology, right? What all things you need to look at. So you have to look at the various assumptions, right, which has been used in the computation. So what are the data sources? Whether the assumptions used are kind of reasonable. You need to do some sample testing, right? So if I have to look at individually, right, like if I look at the PD computation, right, what is the kind of assumption used? How much history has been considered? What is the default history which has been considered? Whether there is an adequate data. So if let's say, so this could be different for different NBFCs. An NBFC has been in existence for 3 years, 5 years versus someone who is in existence for 20 years, right? So this could be different in each of these cases because there's a more seasoned portfolio that a 20-year-old NBFC has rather than a 3 to 5 year NBFC. So the approaches could be different, and it is important for the auditor to assess the appropriateness of how the computation has been done, how the staging has been done. Has the qualitative have the qualitative factors in the staging been considered? What is the policy for stage reversal? So I think, what if there is not enough history, right? How do I compute the PD? Have I used appropriate benchmarking? Have I considered, let's say, the macroeconomic variables in the ECL computation? How the variables were identified? So I think these are some of the things which are very important when you uh, check the ECL model of any NBFC, and we need to get comfort on the appropriateness of the assumption. At the end, there is no explicit guidance that okay, this is how you need to calculate ECL. So every NBFC may have its own ECL model, and the auditor needs to consider each NBFC as a separate case in a way. While you can always look at sectoral experience, right? But still, each NBFC may be different. So we really need to skeptically think about the appropriateness and the correctness of the ECL models and the assumptions used. The third is in terms of the collateral valuation, right? Now, how has the collateral been valued? Has the company obtained valuation reports? Whether the valuation reports look appropriate, whether it has been obtained from an empaneled valuer, what are the assumptions used in the valuation report? So I think these are again important things that the auditor needs to do from a ECL computation, because the collateral valuation is an important factor in the calculation because it impacts the loss given default. So that number should be appropriate in a way. Now moving on to the next slide, if we look at the loan classification and measurement, right? So now again, how have the loans been classified? I mean, in terms of the staging, right? What is the basis for classifying loans as stage 1, stage 2, stage 3? Have you looked at, let's say, at the counterparty level? So for example, one person has taken 3 loans, right? And one of the loan is in default. Now, is there a way in which the company has looked at from a counterparty level, and whether there are any implication on the other loans from the same borrowers? So I think that is again a very important check which the auditor needs to do in terms of the qualitative criteria. Whether the auditor is aware of, let's say, any issue which is faced by a particular borrower, right? And how do we apply that knowledge in a particular NBFC, right? So I think that again becomes very important. And how has the NBFC established these processes to identify, not only identify the NPAs not only based on the 90 days past due criteria. I mean, but are there any other adequate checks other than that as well, whether any particular asset is NPA? So we need to obtain sample loan accounts and look at how the DPDs have been calculated, whether they've been correct, accurate. what has been the management's inputs from a qualitative perspective. So I think these all things are very kind of important when we do the audit in relation to the expected credit loss. Now, if you look at the other thing is the actual, impairment calculation, right? Now the audit team can perform various analytical checks, like what has been the movement in the PDLGD, back testing of assumptions. Are there any changes in the assumptions, or should any assumptions be changed in light of the economic scenario? What has been the historical default information which has been used to develop, the assumption? Are there any kind of, benchmarking which has been done for computation of PDLGD, or is it done internally? And typically the impairment models, right, ideally should be reviewed, let's say after every 6 months at least, to see whether things have changed, the assumptions have changed, or more data now we have, because of which we need to give impact to the current period model. So I think these all things the auditor needs to check whether the company has considered some of these things in the impairment calculation for a particular period. Also, like on a sample basis, you can verify the documentation used to support the calculation of the expected credit loss, including like loan agreements, loan data, so all other relevant documentation to see whether the computation is appropriate or not. And last but not the least, I think, as I said, an ongoing monitoring is very important. So based on our overall knowledge, right, of the NBFC, of let's say the individual borrowers, or maybe let's say impact in a particular, let's say, state or a region. So I think these all needs an ongoing monitoring, basically, where the audit team evaluates the credit, how the entity does the credit quality assessment, how it is monitoring and reporting the loan performance. Are there any changes to the risk profile? Now, sometimes sometimes the NBFC may say that our collections have improved, for example. Now, how do we verify that, right? I mean, whether the collections have actually improved. So these all things will require to deep dive into those specific assumptions with the management may make, and how does it impact the overall ECL computation. And again, you need to check the appropriateness of the loan provisioning policies, how periodically these are being kind of reviewed by the management. Are there any changes in the economic factors that the NBFC has considered? One other thing could be like, there is a requirement to compare the ECL with the RBI, approach, right? RBI prescribed method. So the auditor needs to see whether that has been done appropriately, and any shortfall as compared to the RBI requirement has been provided, not provided. So we need to also factor in the RBI methodology and compare it with the ECL, and whether the company has done it in the first place or not. So yes, I think these are some of the areas around the loan impairment which the auditor needs to do a detailed kind of audit. Now let's move to the next important area, which is investments. I think again, from an investment perspective, what we need to again check from various assertions perspective, right? Whether the purchase and sale of investments are properly authorized. Now, as an auditor, we need to understand the involvement of the senior management in the approval process. Investment limits, types of securities which are permitted for investment. The auditor should review the investment policy, the authorization matrix, to ensure that the investments which are purchased and sold are in line with the policy and the overall business objective of the NBFC. Now, some of the documents which you may review may include like the investment committee meeting, or the board resolutions, or what due diligences have been performed before making an investment, valuation reports, right? So some of these things, for example, if there is an investment in a level 3 company, which is a private company, right, without performing proper due diligence, then this is an area where we need to question, right, that what is the basis of making this investment. Then the other risk could be the investments are not recorded in the investment register or the investment ledger, or are not accounted properly. So again, as an auditor, we need to test that whether the accounting is done as per the applicable accounting standards. And if the investment is not classified properly, then it may have an impact on the valuation and the disclosure requirements. So as an auditor, we need to test whether the investments are kind of not recorded, if there are investments which are not recorded or not accounted properly. The other could be in terms of holding of investment, right, which is not, let's say, reflected in the demat statement. So I think it is again important to verify the existence of investment through external evidences. So the auditor may sort of obtain confirmation from third party, verify the documents such as purchase contracts, bank statements, or demat statements. I think reconcile the security register with the holding statements. So this is again to see whether there is a process by which any fictitious investments, or something which has been even done unintentionally, for example, by failing to record the purchase or investment being made during the year. The other I think important thing is whether the investments are accounted properly, right? So whether there is a likelihood that the investments are overstated, and is there any adequate supporting documents to ensure that the investments are valued properly, and what is the basis for valuation of those investments at the reporting date. The auditor needs to also verify the valuation policy, valuation model, what are the market rates of investments for securities which are traded in the active market, in independent valuation reports. So this is all ensure that there's an appropriateness of the valuation methods which have been used by the NBFC. In addition to that, I think the other issue could be the accruals of investment, accruals on the investments are not accounted. Now, I think it is again important to ensure that the income on those investments, right, are accurately and timely kind of recorded for maintaining the reliability and transparency of the financial statement. So like we should review the interest statements, or the dividend declarations, or the bond coupon payments. We should review the kind of investment register, reconciling kind of accruals with supporting documentation. So these are some of the things which from an investment perspective becomes very important to check. Now, those were the test of control. Now, what do we do from a substantive audit procedure, right? So some of the procedures that we kind of look at when auditing investments. Now, whether the agreements and contracts are in place or not for those investments. Now, if there are any share purchase agreements, verify that, whether it's in the name of the company, the date of the purchase, the number of shares purchased, type of shares, purchase price. So I think we need to, validate this from the share purchase agreement. Contract notes, again, it obviously provides the details of the stock traded, which securities are bought, sold, quantity, rate. So I think this we need to check. Mutual fund statements. So if there are any mutual fund investment, then we verify it with the underlying mutual fund statements. In addition to that, I think the valuation of the investment, how it is done. So we need to do the valuation testing. So for example, investment in quoted securities, right? Or quoted equity shares, we can verify the closing rate from BSE, NSE. Mutual fund investment, we can verify the quantity in NAV from the mutual fund statements. For investment in private, equity instruments, debentures, depending on the business model for debentures, I think you may have to fair value, and whether the valuation has been done based on an independent valuation report and at reasonable intervals. So I think we need to get that comfort on the valuation of the investments. In addition to that, I think the reconciliation of the investment, right, in terms of an independent confirmation. So whether the investments which are appearing in the books of accounts of the NBFC are kind of corroborated with, let's say, the demat statement, right? Whether those or are there any discrepancies in that mutual fund statements as we spoke about. In addition to that, I think we also send balance confirmations for any external evidence in terms of the existence and the accuracy of investment. And if we don't receive the confirmation, then obviously there are alternative procedures that you need to perform. So I think this gives an overall comfort on the existence and the ownership of the investment, whether the NBFC actually owns or holds those investments or not. So yes, I think these are some of the processes which we need to do from a kind of valuation, reconciliation, existence assertion, right? Now the next step, as in loans, I think again we need to look into the impairment of investments. So are there any kind of indicators of impairment? Verify the market value of investments. Any information that, let's say, you have through external sources like news or any webcast, or any market information that typically indicates the downfall in the industry or the market of the company in which the investment has been made. So I think again the professional skepticism comes into play. You need to review the impairment workings. What are the assumptions? What are the methodologies? So I think we spoke about some of these things when we discussed about the loans. So I think the similar things need to be applied even in case of investments. In addition to that, I think we also have to perform some analytical procedures, like you sort of establish some expectations, right, by developing the understanding of the business, industry, past investment activities, current market and economic conditions, and then you compare the current value with your expectations which you have set as as an auditor, and see if there are any significant variances, and based on that we need to obtain the reasons for the variance from the management. Again, we also need to look at whether is there any kind of concentration of investment portfolio, or whether the investments are not in line with the overall investment policy of the NBFC, and are there any related risk, and seek explanation from the management for those things. Likewise, I think we should also perform procedures to kind of, develop expectations of income from investment activities, right? And compare it with previous periods and maybe do some industry benchmarking. So this will, give us an overall comfort, right? I mean, analytical procedures typically is more about trying to understand the reason for the variances. I mean, identify the variance and seek the explanation for the variance from the management and kind of document those things. In addition to that, I think, as we all know, there are extensive disclosures which are there both for loans and investments. And I think uh, this is one area where, some of the disclosures, for example, around ECL or around fair value disclosures, I think these are some of the, very detailed and time consuming disclosures, and we really need to understand how the company has prepared those disclosures, because this disclosures are not easy to make. And how has the company got the data, and how they have kind of bucketed it into each stage, how they have tracked the movement, right, from one stage to another. So this is very important as an auditor to understand the entire process, even for making the disclosures, more so if the company is following Ind AS. So I think checking of the disclosure is also a very kind of significant task, and the auditor needs to understand that properly. Okay, so I think then we move to the other important area from an NBFC perspective, which is borrowings. Now, again, I think if we look at what could go wrong, right, as far as borrowing is concerned, there could be an unauthorized or unapproved borrowing. So unauthorized borrowing will potentially accumulate the debt beyond, let's say, approved limits, which may in turn impact the financial stability. It may impact the liquidity of the company and potentially insolvency. So I think that is where we need to see whether the company has a proper policy for borrowings, and whether the borrowings are as per the policy and have been appropriately authorized. So it is essential for us to review the borrowing policy, the authorization matrix, loan agreements, board minutes, to ensure that all borrowings align with the authorized limits and has appropriately complied with the due process. So, for example, if one person has authority to initiate and approve the borrowings, then that there is a potential or a likelihood for misusing the position, or resulting in unauthorized borrowing. So I think, again, whether there is a proper maker checker or a proper authorization matrix or an approval mechanism in place to ensure that the possibility of an unauthorized or unapproved borrowing is not there. What all checks are there in place for that? The second could be in terms of unrecorded or misclassified borrowings. Now, unrecorded or misclassified borrowings may kind of occur when loans or borrowings are not properly accounted or incorrectly classified in the financial statements, right? And this could lead to a misrepresentation of the company's financial statements and performance. So, for example, some borrowing classified as, let's say, other financial liability instead of debt security, right? I mean, so we need to really see whether those borrowings have been appropriately classified or not. In addition to that, I think as an auditor, we need to sort of carefully examine the supporting loan agreements and other relevant documents to ensure that all borrowings are kind of accurately recorded. And also we need to obtain evidence from external parties, like a loan balance confirmation from a bank or a financial institution, movement in bank balance and verify bank statements to trace that, if at all there is any huge amount which is credited to the company's account and not recorded in the books or vice versa. So company may also misclassify borrowing by inaccurately categorizing them as either current or long term. So by kind of manipulating the classification, the NBFC can potentially hide short-term liquidity issues or present a more favorable debt maturity profile. So, as auditors, we must verify the proper classification of borrowings based on the terms outlined in the respective loan agreements and the repayment schedules. So I think this was as far as the risk relating to unrecorded or misclassified borrowing is concerned. The other important risk could be, in terms of the non-compliance with the debt covenants or the loan agreements. Now, typically this happens when, an NBFC fails to meet the terms and conditions outlined in the borrowing contracts. And failure to comply with such covenants can result in, let's say, financial penalties or higher interest rate or maybe even default if the non-compliance with those covenants are kind of very significant. Now covenants, I mean, as we know that typically include financial and operational obligation that the borrower must adhere to. Now it could be like submitting financial statements or maintaining minimum percentage of performing loans or maintain a financial ratio like a debt to equity ratio up to at a certain threshold or an interest coverage ratio or a current ratio. So I think some of these ratios various debt agreements provide for, and how the company or how the NBFC is tracking these covenants. Is there someone even tracking these covenants, and whether it is being monitored? So I think the auditor needs to understand that process very well, and what kind of reporting is done, what kind of monitoring is done, and what is available for the auditor to assess that, okay, whether there is any breach of a covenant. Now, NBFCs may sometimes unintentionally breach loan agreement due to, let's say, inadequate monitoring or oversight. I think this could occur when the NBFC fails to fulfill a specific obligation or does not make a timely interest or principal, or does not provide the financial information or maintain ratios as we discussed. I think we need to clearly identify or assess the effectiveness of the monitoring mechanisms and rectifying such breaches. So I think again this is very important, I think, in terms of whether there are any monitoring mechanisms to ensure that the loan covenants are being tracked and are monitored, and appropriate actions are taken to rectify any kind of breaches. Because in some cases what may happen is if there is a default, it may be possible that the loan may become repayable on demand, and it may just impact the entire kind of, let's say, asset liability profile possibly. So I think we need to be really mindful of these things, and this is why it is important. The other thing could be like whether the interest has been calculated or recorded appropriately or not. So I think there could be again unintentional errors in calculating the interest expense due to maybe some system error or some incorrect formulas or some human errors, which could result in a misstatement, I think. So I think as auditors, it is crucial for us to verify the accuracy of interest calculations by kind of reconciling the interest expense with the underlying documentation. Now, in many cases, like, this may be a manual exercise, right? So the company may not have a treasury system wherein the entire interest expense is kind of calculated automatically, right? So many of these things may be maintained in Excel sheets and so on, right? And how do we as auditors ensure that the calculation is done appropriately and there's a proper, let's say, maker checker mechanism in place to ensure that the interest is not incorrectly calculated or recorded. So I think now let's look at some of the substantive kind of audit procedures that we should look at when checking the borrowings. Now, I think the first is, of course, the review of the loan agreement. So you verify the term loan agreement, the debenture term sheet, in terms of, let's say, the purpose, utilization, terms and conditions, amount disbursed, any charge which is being created, rate of interest, repayment schedules, and so on. Then you should also obtain, let's say, minutes of the meeting, board resolution to verify the limits, purpose, approvals, and so on. Verify whether the company has defaulted or failed to comply with the loan covenants. In addition to that, I think the other thing which is important is verifying the interest expense and the related accruals, right? So you verify the interest working to ensure that it is appropriately recorded. You check the bank statement to actually verify the interest payments. Perform analytical procedure. Again, this is very important that you check what has been the borrowings year on year, what has been the interest expense year on year. You understand based on your knowledge about the company, right? Whether there is any significant borrowing which has been taken. Is there any, what is the reason for the variation in the interest expense? So I think again we need to perform such analytical procedure on the borrowings. In addition to that, I think we also need to look at the reasonableness of the interest expense, right? If our overall knowledge of the business, or based on our discussion with the management, let's say we believe that the cost of funds is 10%, right? And when we do the audit, we see that okay, it's 13%, 15%, or 5%, right? Then we need to question that, okay, it doesn't look reasonable to what we've discussed, right? Or what is our understanding of the cost of funds. So I think this may also involve comparing of interest expense to the prior periods, industry benchmarking, some financial ratio analysis, and so on. In addition to that, I think we also need to send confirmation. I think independent confirmation are always important. I think and we need to send requests to banks, financial institutions to kind of verify the outstanding balances as on date, and to ensure the kind of completeness. And if the confirmations are not obtained, then what are the alternative procedures that can be kind of performed. The other thing is, again, as we said earlier also briefly, that we need to assess the classification and presentation of the borrowing, and for which we need to understand the terms of the borrowings for kind of verifying the classification, and whether it is in line with the accounting standard requirements, whether it is in line with, let's say, Division 3, Schedule 3 requirements. We need to verify the tenure from the loan agreements, repayment schedules. I think whether the presentation is appropriate or not. And also, some other thing like default in borrowings is also required to be sort of reported under CARO, right? So from that perspective, also we need to be mindful of, and we need to get all these data for to enable us to do the proper reporting in our audit report and CARO. So yeah, I think these are some of the important substantive procedures as far as the borrowings are concerned. I think so obviously there are other areas which are there on the balance sheet, but I think to my mind, these are some of the core areas for an NBFC, which we really need to kind of be mindful of, because this constitute the significant component of an NBFC's balance sheet and PNL. For other areas like fixed assets or taxes, I think share capital. So I think some of these things we would obviously perform the sort of appropriate audit procedures as we do in any other company. So those are typically not NBFC specific, I would say. So if we move to the next slide, then I think if you look at overall audit considerations, right? What are the other things? I think these are some of the individual areas like loans, borrowing, investment. Now, one important thing that we need to look at is the new scale-based regulations, right? Where the regulatory structure for NBFCs now comprise of 4 layers, right? Based on their size, activity, riskiness, and so on, where each NBFC is categorized into a base layer, middle layer, or upper layer, right? So the scale regulations now prescribe various requirements like net owned funds, and these are all changed, right? So change for some categories of NBFCs, and then what has the company done for these things, or how does the company plan to achieve this level? So I think this again becomes very important. Changes in the NPA classification norms. So I think there are some changes in the NPA classification norms for different categories of NBFC, and we need to see how this has been given impact of, or how this has been taken kind of care of on kind of transition to the scale-based regulations. Have the appropriate changes been made in the system to adhere to the requirements? The other is in terms of the requirement on the board of directors. I think at least one of the directors shall have the relevant experience of having worked in an NBFC or a bank. There are other requirements like ceiling on IPO funding of rupees 1 crore per borrower. So how the NBFC is going to kind of take care of that, and is there any kind of tracking mechanism for these kind of transactions? So yeah, there are various kind of regulatory changes for different layers of the NBFC, and other thing could be NBFCs with 10 or more branches are now mandated to adopt the core banking solution. So this again, it is not like applicable across all layers, but you need to be mindful, like as an auditor, which layer your NBFC belongs to, and you need to see whether it complies with the requirements for that particular layer. In addition to that, if we see for NBFC's middle layer and upper layer, in addition to the current regulatory disclosures, there are other sort of disclosures which are also required in the financial statement, like the corporate governance report, or let's say the disclosure on the modified opinion, if there is any items of income and expenditure of exceptional nature. So I think these are some of the new disclosures in the financial statement. Some of the companies, listed NBFCs and all, may be doing it already pursuant to, let's say, some other regulatory, like a SEBI requirement or something. But otherwise, we need to now include some of this disclosure, like breaches in terms of covenants, divergence in asset classification norms. So I think some of these things we need to be mindful of. In addition to that, I think the other important thing is some of the regulatory requirements which are there. like compliance with the conditions for the certificate of registration, compliance with the capital adequacy. So there are rules for capital adequacy which we know, and what are the tracking mechanism for that, uh, and whether the company is complying with that or not. In addition to that, I think there's a compliance with the owned funds requirement which is there. So whether in some cases we have seen that that there is no process as such, let's say, for computing the own funds, or it's not appropriately reported. So I think we need to be ensuring that the NBFC is tracking the own funds and it is compliant with that. In addition to that, I think, of course, we have to comply with the Ind AS requirement as well. I think there, as we know, right? I mean, especially the standards around financial instruments, which are very vast, and some of the things, like for example, even things like debt equity, right? A lot of NBFCs sort of issue various kind of structured debt in a way, like CCPS or optionally convertible preference shares, redeemable debt, and so on, right? So we have to be really mindful as auditors whether the classification of such instruments have been done appropriately, because this has a very significant bearing on the financial position. So if, let's say, some CCPS may become equity, or vice versa, right? I think that could have a very important bearing, and this is what I have noticed in case of fintechs, typically, where this is a very important issue. So as an auditor, we have to be really skeptical and understand the terms and conditions of some of these instruments, and whether the NBFC has appropriately classified such instrument as debt, equity, or a compound financial instrument. So I think that is one aspect. The other is, I think, a lot of time we see NBFCs doing a lot of assignment transactions and all, right? So again, as an auditor, the question for us to ask is whether such kind of transactions may have an impact on the overall business model, and whether the company has properly documented a business model or not. And if because of such transactions, or let's say sometimes some NBFCs may decide to discontinue a certain category of loans, let's say. So I have a retail portfolio, I have a corporate portfolio, and I may decide that, okay, I want to downsize my corporate portfolio, right? Now, what could be the implications of that? So are there any implications on the business model? Are there any implications on the, let's say, disclosure around discontinuing operations or assets held for sale? So some of these things, again, we have to be very mindful of. In addition to that, another Ind AS related issue that we generally see is for assignment transaction. Now, when there's an assignment transaction, there's a specific accounting which the Ind AS require. Now, whether that accounting has been done properly, right? Whether the appropriate derecognition gain or loss has been calculated. How have they done that? How have they calculated the excess interest spread properly? So I think these are some of the Ind AS requirements which are again very important. Other accounting nuances, if we see, is in terms of EIR calculation, right? The effective interest rate calculation, whether that has been done appropriately or not, whether the expenses which should have been amortized are amortized or not, or whether some expenses which need to be taken upfront are taken upfront or not. And the same holds good for the income side as well. So, and how the company is calculating that, whether it is manual, automated, are there any kind of risk around the, calculation? Have we verified those calculations? So these are some of the, again, the Ind AS, nuances which the auditor should be kind of mindful of. The other thing is, the disclosure, as I said, there are a lot of disclosures, and to audit the disclosures is itself a significant kind of challenge for the auditor. And I think we need to really understand how those disclosures are prepared. What is the control on those disclosures? Where are the numbers coming from? Is it consistent, year on year? Sorry, just please give me 2 minutes, if you don't mind, Hemel. Hello, can you hear me? Hello. Just give me 2 minutes, please. Sorry. Just hello. Yeah, sorry, my apologies. Sorry for that. So yeah. So I think, just to kind of continue with that. So I think from an Ind-AS perspective, I think while of course all the audit procedures and everything are kind of very important, but I think we also need to be really mindful of some of the nuances around the Ind-AS, calculations and requirements. In addition to that, I think, needless to say, I think the compliance with Division 3 to Schedule 3, which is for NBFC, I think it is important for the auditors to check whether all the disclosures as required by Division 3, Schedule 3 have been kind of appropriately made by the NBFC. So I think in addition to that, I think there are, of course, the IT related. A lot of things are now automated, and whether there is a need to sort of involve the appropriate experts, right? A lot of things are very specialized, and especially with the different loan management systems, the different accounting system. I think what are the kind of IT controls which are there, and whether as an auditor we need to sort of involve the appropriate experts to help us, right, in conducting the audit in an efficient and effective manner. And as audit firms, I think many of us would have some tools like, sampling tool, or maybe a loan analyzer tool. And how do we best kind of make use of such tools in kind of conducting the audit? uh, some of the new things, as I said, about the scale based regulations and all. I think again, as we move forward, I think it becomes important for us to see how the NBFCs are going to comply with the various kind of requirements of the scale based regulations as well. So yeah, I think that's broadly from my side. I know we are a bit early, but happy to kind of take up questions. Yeah, sure.
Thank you so much, sir. Can you hear me now?
Yes, I can.
Sir, sorry, due to the technical glitch, you got disconnected. Sir, thank you so
No
much
problem.
for wonderful deliberation. I have received certain questions. If you permit, can we ask, sir?
Definitely. Yeah, please go ahead.
Sir, first question is it permitted for the NBFCs granting gold loans to adjust the outstanding by issuing a new loan? Is renewal of gold loan permitted?
So first of all, that is more of a regulatory aspect. But to my mind, I think again, if such a thing is happening, right, then we have to just see whether there is a sort of chance of evergreening here. I mean, I've seen some cases, but I don't think that, we'll have to see the specific case, whether that is happening because of the underlying credit risk, right, or the borrower not being able to repay. While of course, there is a security of gold which is there, right, but that may be sort of impacting a loss given default, let's say. But you'll need to still consider whether there is any likelihood of evergreening in that case.
Yes, sir.
Well, hello. Yeah, sorry.
Sir, in case of change order of auditors, if the previous auditor has given a qualified report And if the company does not set the issue, how this has to be tackled by the present auditor, if the NBFC does not function as per the RBI guidelines.
Yeah, so I think this is one thing where you have to be really even more careful, right? More so because there has been a qualification which is qualified report which is issued by the previous auditor. So I think that is in itself a concern, right, for the incoming auditor as well. And even still, if let's say the NBFC is not addressed, then you clearly need to see what are the options which are available with the current auditor, whether you yourself may want to kind of qualify the audit report, or whether we need to really think about whether you want to even continue with the audit for that matter. Because if let's say the previous auditor has already issued a qualified report, still they have not done anything, right, for that matter. So yes, I think we'll have to deal with that particular issue. I mean, and what's the best way to deal with that?
Yes.
But yeah, I mean, see, there's no I mean, we need to understand the specific facts, but at least these are my immediate thoughts on this.
Sir, COR of the NBFC cancelled during March 23. How to treat the COUP up to the date of cancellation in audit for the year 2023?
Sorry, COR has been cancelled.
And COR has been cancelled during March 23. So how to treat this up to the date of cancellation in audit of year 22-23?
So see again, so this basically in a way casts a doubt on the going concern itself, right? Because there's a likelihood that you may have to kind of shut down the business itself, right? And see, there could be, again, I think what I have seen in some cases is that there could be a voluntary surrender of license, or there is a surrender, or there is a cancellation because of some specific reason, right? So again, we have to go by the specifics of the case, but I think we'll have to think through whether that casts a doubt on the going concern, or what is the reason for the cancellation of COR, and appropriately take the decision.
Sir, whether ECL is applicable to NBFC for financial year 23-24?
No, so ECL applicability is linked to the Ind AS applicability, right? So if Ind AS is applicable to the NBFC for 23-24, then or to any particular year, then ECL is applicable. So the way in which you have to think about it is that whether Ind AS is applicable to the NBFC for a particular reporting period, which is based on either, let's say, a net worth criteria of 250 crores, or based on the listing criteria. So if let's say an NBFC had got debt listed or equity listed, or in the process of listing in a particular year, then if let's say it happens in 23-24, then for 23-24 you have to apply Ind AS, and including the comparative period, which is 20-23. And if you have to apply Ind AS, then you have to apply ECL, because expected credit loss is a part of Ind AS. So yes, then if the NBFC has to apply Ind AS, then they have to follow ECL.
Yes. Sir, in case the borrower is not able to make the payment of the loans and request the NBFC for extension, then the NBFC issue a fresh loan to close this loan. Is it permitted?
See, one permission is, as I said, it is more of a regulatory thing, but to my mind, this could happen where you issue new loans. But the important thing here could be that, have you done this because of the financial difficulty of the borrower, and because of which, let's say, you have to classify this, even the new loan, as an NPA, right? Because essentially the the new loan has been disbursed to repay the old loan, right? This was a case of evergreening, which I spoke about. So I think you need to be mindful of that aspect, that, if it has been specifically issued for, settling the existing loan, whether that itself is an indicator of default, or let's say an indicator of a significant increase in credit risk. And because of which you have to maybe classify the new loan as maybe a stage 3 loan or an NPA loan, possibly.
So last question. Member is asking again, one gist or your expert advice. He's asking, when the audit is going on for a small NBFC, so what precautions is to be taken while auditing, sir? First time audit of a small NBFC, and earlier it was audited by someone else.
Right. So I think, see, first of all, whether it's a small NBFC or a large NBFC, right? The overall audit procedures, I don't think so. It will be different. I mean, too different, right? But yes, at the same time, let's say some of the additional challenges or additional consideration, let's say for a larger NBFC or a listed NBFC, right, may not be kind of relevant possibly in this case. But I don't think that the overall process of audit will undergo a very significant change, because I mean, what you need to do for a loan or for a borrowing or for an investment, those procedures you kind of still need to continue, right? I mean, that I don't think so. Maybe, as I said, some of the disclosures or some of the requirements which are there for a large listed companies may not apply to this company. But to my mind, in terms of the following the audit procedures, I think we still need to look at all of these things, irrespective of the size of the NBFCs, right? Maybe possible that some of the substantive procedures may be little lesser, because let's say if you know that there is only one borrowing, for example, or two borrowings, right? Or let's say there are only a few loans, then your timing for auditing that particular thing may be lower, or maybe okay, these are the only two borrowings which are there, right? Then I mean, you will not spend too much time then as compared to someone who's got like 20 borrowings. So yeah, I don't think that the process of audit or what you need to check and all may undergo a big difference. I think what may happen is that your timing to do the audit may be a little less, or maybe some of the requirements for a large company may not be applicable for them. And yes, if it's a first year audit, then you need to see whether there have been any observations by the previous auditor, like, in one of the questions which was asked, that if there's an audit qualification. So are there any concerns which are raised by the earlier auditor, and how do we address those things, or has the NBFC addressed it in this year?
Yes. So thank you so much, sir, for such a wonderful deliberation, as well as for sparing your valuable time. Our members have gained a lot. I have gained a lot through your deliberation. And once again, on behalf of Auditing and Assurance Standard Board, we extend our heartiest thanks towards you for sparing your valuable time and for enlighten all of us on various intricacies in the audit of NBFC. Thank you so much.
No. Thanks a lot, Anilji, and thanks a lot to the Auditing and Assurance Standard Board for giving this opportunity to me to present in this forum. And I hope the participants have kind of gained something out of this deliberation. And it was indeed a pleasure to present in this forum.
Thank you, sir. Thank you.
Thanks a lot. Thank you.